Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar staged another bearish contest at the bullish foundation seen at 67.60.75. As you can see, once again, the market survived the challenge after the fourth consecutive challenge, rebounds and now back above 68 cents. I do like the way the technicals have shaped up. We're in a prime position to break higher. That is, if we see a clearance of 68.55, that should put on the map towards 69.35 to 70 cents. I'm going to get negative at the bottom of this range after the few challenges that we have seen have been responsive to the bull case, and therefore if the technicals can break through the midway point on the RSI, could encourage further upside potential. But as I mentioned, 68.55 would need to be cleared to give further passage towards that 69 to 70 cents. The euro still maintains heavily towards the downside as the US dollar, which measures the greenback strength against a basket of six major currencies, surged to a 20-year high of 107.05 before dropping back to 106.90. If we look on the monthly, you can see here that the next support level is at 101.70, and failing to hold there would give further risk and towards 99.50, 95 as a potential target. In light of the risks this week, we still have the main event being the non-farm payrolls, with a number expected around 275,000 jobs added last month. Let's see if the bulls can return and defend current levels and see if we can see a rally back towards 102.90.95 with the top around 103.80 to 104.15. Keep an eye on this pattern. If we end up seeing three dojis, then it would be a tri-star, and that's negative to add with the technicals as well for dollar yen, and therefore should eventually see the market crumble towards 135.45, and with the downside objective to 134.70 to 133.70.90. It has been a slow journey, but nevertheless the market is still struggling to recapture the highs back towards 136, 137 area. So let's see if the market can trickle back towards that bottom side of the range and hold the call towards that 133.70.90 support. Now I'm looking at the monthly outlook. You can see here there is very much pressure on this support level for sterling of 119.20. There is still much troubles for UK PM Boris Johnson, as many of his cabinet ministers have resigned. Let's put a little bit of pressure back on the pound. Overall, though, there is some indication that we are oversold from a monthly, from a weekly, and the daily has rebounded out of that oversold territory. If the market can claw back some of its losses, a break above 119.75 will give further upside momentum to 120.5 to 121.5. However, as I mentioned, a close under 119.20 would be devastating for the bulls and could see a further challenge down towards 118.15.30 and reassess. Sterling CAD still seesawing above the level of 155.20. Although we have seen a few stabs at this level, we haven't fully broken it. Divergence is clearly in play here for the RSI, and if so, we could see a snap to the upside. And if so, look towards the region at present of 156.25 to 156.55. Wrapping up with gold and oil, the markets from a weekly are oversold and pressuring this key point, which is seen at 1,738.41. We're very close to it at the moment as we trade at 44. Now a break beneath this level would be devastating for the bullish outlook and might expect to see further weakness. And the next call will be around 1,690. But we do need to see a New York close under 1,738 to support the downside call. Otherwise, we could see a little bit of profit taking slowly coming in. As I mentioned, we are oversold, but the ADX from a weekly is bearish. Along with that, so is the overheating ADX for the dailies. Upside resistance seen around 1,752 to 1,764.6. Finishing up with oil, the market plummeted all the way down now towards its next key support level. That was around close to 92.20.40. However, from the sharp rebound, we're just hovering over the key level of $95 a barrel, where although it has been broken, it didn't quite get a full confirmation to the downside test. Still though, keep an eye on the pattern as we are seeing a little bit of divergence here. But if we see a break above 97.15.55, then that could see a rally back towards 99 or even 101. It's very much a roller coaster ride at the moment, so it's very hard to pinpoint exactly where this market's going to end up. But nevertheless, there is a base forming, I believe, around 92, and the top is at 101. So we could easily see a move down, reject, and then rally on. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.